I'm about to break it down when it comes to refinancing, and I'm going to help you determine if it's the right move for you at this time. Now, this is part 2. Part 1, we talked a whole lot about the comparing if you want to buy now and refinance later versus waiting until interest rates go down. So if you want to know more about that, go back, look at part 1, and then come back to part 2. A refinance means to replace your old loan with a brand new loan. Typically that would be at a lower interest rate, but there's a lot of tricks to the trade when it comes to refinancing. And there's a myriad of different reasons that you might want to do this. I'm Karr Alexandra with Ascend Estates, and I'm here to help you build generational wealth. So let's get going. Usually we're prompted by some sort of life event when we want to refinance. Maybe you're trying to host a wedding, or you're considering expanding your real estate portfolio. Maybe you want to get some investment properties. Maybe you just need cash out to start a business or to pay off some debt. You could also be trying to get a cosigner off your loan, or the big one, getting rid of your private mortgage insurance, the holy grail, right? So any of those reasons, along with getting a lower monthly payment as well, are good reasons to kind of research if a refinance is right for you. So let's break down some of the options when it comes to refinancing. The first one I'm going to talk about is a cash out refinance. It allows you to access the equity in your home. Equity means that it is the amount that your home is currently worth, not what you purchased it for, but the current value of your home, and then minus how much you currently owe on the home. So you have to look at what your current loan is, what the current market value is, and then if you subtract that from the current market value, that gives you your equity. If you're not sure what your current market value is, you can reach out to me. You can drop a comment. I can help you figure that out, or reach out to your realtor and they can help you do that, okay? But if you're considering a personal loan or need some cash quick, a cash out refinance could be a good option because it has cheaper interest rates than any personal loan is going to have, and it's your own money. So yes, you are replacing your old loan with a brand new loan, and the interest rate, you're going to want to make sure you take a look at that before you're ready to refinance. But if you apply and you like the numbers, go for it. Take that money out. It's going to be at a lower interest rate and overall lower monthly payment than if you go get like a business loan or a personal loan, or honestly any other loan. Now keep in mind, you will still have to qualify for the monthly payment that comes along with this new cash out loan. So they're going to look at your income and your credit. So keeping good to excellent credit and keeping steady income is key when you're looking to refinance. But as long as those are good, you're going to be just fine. Now, there's another alternative. If you don't want to do a cash out refinance, if you don't want to redo your whole loan, you really like how your loan is right now in the house, you can do a home equity line of credit, which doesn't give you a whole new mortgage. It just gives you a line of credit that you can access based on the equity of your home. So typically what happens in that case, after you apply for it, the line of credit is issued to you, and you can get typically about up to 80% of your current equity. So let's say you have $100,000 in equity, you could take out $80,000 as a line of credit. And the amazing part about that is usually for 10 years, you're making interest only payments. Interest is usually about 8 to 10% on home equity line of credit. For that amount, you're probably looking at about $100 a month. But other than that, you don't have to pay the principal amount back in a monthly payment. It's kind of like a credit card. You just have to pay the minimum payment. And then let's say you come into a bunch of cash. For whatever reason, you can pay it all off at once, maybe 5 years down the line or 3 years down the line. Obviously, if you sell your home, then whatever's owed on the line of credit is just going to be taken out from your proceeds. So that's a really great option if you are looking to maybe do home renovations, again, purchasing like an investment home or expanding your real estate portfolio. And you can take cash out with those too. So it's not just a credit card, you can use cash. So those are a great option. Again, you got to qualify, good to excellent credit score, steady income, very important. Now, some people want to reduce the term of their mortgage loan. So that means maybe we bought it a 30-year term, which is what I usually recommend to people, just because that's the lowest monthly payment you're going to be able to achieve, is a 30-year term. Now, you can always pay extra on your mortgage. If you win the lottery, you can pay off your mortgage the next day without a prepayment penalty, typically. Make sure that's true with your lender, but I've never sold a home that did not allow you to pay off the mortgage whenever you wanted to. But let's say you want to make the home you're in a retirement plan, or you just want to get it paid off so that you can start, again, expanding your real estate portfolio. And you've been in the house a little bit while you're used to the payment. You can apply for a refinance and shrink your mortgage from like a 30-year to a 20-year or a 15-year term. And if you're comfortable with the payment that they put in front of you, go for it. Then you know you're going to be paying your house off in the next 15 years. And again, you can always pay more. But that's a great feeling to know you can afford that. Along with that, of course, good to excellent credit, steady income, still very important. The payment might be a little bit higher, but you might be surprised because, again, your home has probably gained value since you closed on the first loan. So the payment of that loan may not be as high as you think it would be. Okay, so let's talk about the fourth item, which is a cosigner who wants to get off of your loan. Sometimes a cosigner is really ready to buy their own home. So what if they're knocking on your door asking you if they can get off of this loan? What do? The answer is typically refinance. However, you don't have to refinance, okay? So if you have an FHA loan, if you don't know, ask your lender or your realtor. But if you have an FHA loan, then after 12 months, if you have been the one paying the mortgage and the cosigner hasn't helped at all with paying, you can provide your last 12 months bank statements proving that you're the one paying that mortgage. Send it over to the cosigner. The cosigner sends it to their lender. The lender will remove that debt from their debt to income ratio. So it's like they never really co-signed. It has to be 12 months minimum and that you have to be the one making the payments, but it avoids you having to refinance if you don't like those rates. Now, if you do refinance, you got to wait at least 6 months typically. Then you can do a refinance to remove them completely. And that is the only way to remove a cosigner. Now, typically you got a cosigner because of an income challenge. So we need a plan in place. You can't just refinance and take them off, because if you don't qualify on your own, that refinance is going to be denied. So are you making more income? Do you have somebody who can now safely replace that cosigner? What's the plan? But as long as we have a good plan in place, then, it's pretty easy. Good to excellent credit, steady income from everyone. Take about 3 weeks and you can have that person completely removed from your loan. And the fifth and final major item is maybe you want to refinance because you want a lower monthly payment. So there's pretty much 2 triggers that would make you want to do this. One is you're hearing that interest rates have gone down, which is great. So you want to be aware of your current interest rate. Hopefully you know that, and if you don't, you can always call the person that you're making your mortgage payments to and ask them, what's my interest rate? It may also be on your mortgage statement monthly. You can take a look at that. And you also want to know what kind of loan do you have? Do you have an FHA loan? Do you have a conventional loan? Do you have a VA loan? You want to be aware of that as well. But if interest rates have dropped even 0.5% since you closed on your home loan, you might be in luck in terms of reducing your monthly payment a bit. Typically, I would say probably want it to drop a whole point, like 1 percentage point, before you do a refinance, just so that it's truly worth your time and the investment. Another way you can lower your monthly payment is just if your loan to value ratio has gotten larger, which means that the value of your home has gone up quite a bit since you closed on the house. Even if the interest rate is the same or even higher, your monthly payment may end up being lower because you have a larger loan to value ratio. So if you want to lower monthly payment and you know the value of your home has gone up quite a bit, it's worth researching and looking into. Of course, good to excellent credit and steady income. I'm gonna say that again. Those are very important when going into a refinance. And then we've got the big bad private mortgage insurance that I sure don't want to pay, and I'm sure you don't either. So private mortgage insurance is charged typically until you're 20% into your loan. It makes the bank feel better. If you're going to default, they feel like if you don't have 20% of your loan paid, you may be a higher risk. Well, you were probably told by your lender or your realtor that you have to pay 20% of your loan. you don't have to pay 20%. I got good news for you. Your loan to value ratio has to be at 80%. There's two ways to do that. One is that you've paid down your loan. The other one is that your value has gone up. So it's really important to understand how your home value has changed over the years. Because if your home value goes up by 15% and you pay 5% of your loan, guess what? You've got an LTV of 80% at this point. You could refinance and drop your private mortgage insurance, which sometimes is anywhere from $150 a month to $350 a month. It can save you a lot of money. Now, if you're an FHA loan, you have to refinance to a conventional loan in order to drop the PMI, which for you is actually called MIP, but it's the same thing. But you can't drop it if you're FHA. So you've got to get your credit to a good to excellent range. Always say 700 and above is ideal if you're going to do this. Then you also have to make sure you have good, steady income that matches or is above what you were doing when you got your home. As long as you got those two things, you're going to sail right through that refinance and take off that private mortgage insurance. A refinance is always going to be a great option if you keep good to excellent credit score, and also if your income is steady, because you are just accessing your equity, which is your own money. So use that money to build your generational wealth. It typically is only going to cost about $3,000 to $5,000 to do a refinance. You'll order an appraisal, and they can even roll those costs into the loan amount. So you really don't need a penny. Now, obviously, the more you have saved in cash and in your savings, the better situation you're going to be in. But don't let that stop you. Let's use your own money to start building generational wealth. Was this information helpful? I know it was a lot. If you have questions about anything I said here, just drop a comment. I am going to respond to you and make sure I get you good answers. If you're considering a refinance at this point and you need a trustworthy lender recommendation, or if you just want to start expanding your real estate portfolio, I can definitely help you with either one of those. So again, drop a comment. I'm Karr Alexandra with Ascend Estates, and you can reach me by text or call. My number is below. You can also reach out to me on Instagram, DM me, or drop a comment right here and I will respond to you. If you want more information, we've got a plethora of videos for you to choose from. So take your pick and let me know how I can help you.